All right, gentlemen, we're welcoming guests in. Looks like we have about 186 in the room that are coming in.
Good morning.
Good morning, ladies and gentlemen. If you could please mute yourself on checking in. We do have a very full room today.
And comb your hair while you're in there.
Oh, here we go. All right, good morning. My name is Cindy Woolley, and today we are hosting a forum for GSAC members about flood insurance and what you can expect from your policy. We do have more people arriving into the room at the moment. I am not muting all attendees because we do have a very full program today. We are expecting about 400 attendees, and so if you'll just bear with me while we allow the attendees to come in, we'll give more people a chance. All right, to our speakers, you were among the muted. I'm asking you to unmute at the time. Hold on one second. All right, so it is 9:06 a.m. We have 200 participants. We are expecting more to jump in, but in respect for everyone's time, I think it's a good point to go ahead and get started. I'm going to start with just a few housekeeping notes. Again, my name is Cindy Woolley. I'll be managing the Zoom portion of this conference. This session is currently being recorded, and a link will be emailed to registered attendees. If you would prefer to not appear in the recording, you may simply turn off your camera by clicking on the camera icon to the lower left-hand corner of your screen. To receive updates on future events like this, make sure to visit gsacnaples.org and register for email updates on the pop-up window of the homepage. I will pin our panelists to the main screen. Please make sure that you are in speaker view. You can check that in the upper right-hand corner of your Zoom settings. Now, when you enter the room, you're automatically muted. As a courtesy to all attendees, please leave yourself muted unless we request that you open your microphone. If by some chance you do lose connection with the meeting, you can click on the link that was in your confirmation email to rejoin the meeting. You will again be placed in a waiting room, but I will be monitoring that to let you in. If you have questions during the meeting, you may submit it via the chat box in the lower right-hand portion of your screen. Our moderator, Howard Handler, will read the questions to the panelists when time allows. Contact information for our panelists is currently available on our website at gsacnaples.org. And again, a replay will be available on our website following this session. I would also like to read just a quick disclaimer that GSAC presents these forums solely as a service for our association members and residents. Our objective is to inform, not advise. Thus, the content of today's presentation and the information imparted by the presenters is not a substitute for you discussing your own association's issues with your legal counsel and professional advisors. GSAC makes no recommendations as to your legal needs and disclaims any responsibility for your individual decisions. With that, I will turn the presentation over to Mr. David Feit, our President of the Board of Directors.
Well, good morning and welcome to today's forum. As Cindy indicated, I'm Dave Feit. I'm the current president of GSAC. We're delighted to have you with us today and in record numbers. As Cindy indicated, there are over 400 people registered for this forum. Truly an outstanding opportunity for everyone. As you know, GSAC as an organization has been around for more than 40 years. Our mission continues the tradition of enhancing quality of life for our members and the residents of Gulf Shore Boulevard North through education, government advocacy, communication, and beautification. As the board began preparation for this season's activities, we knew it would be important to concentrate on things that would provide the most impact to our members. Then along came Hurricane Ian, and we knew exactly what our agenda would be. To determine the best course of action for this year, we conducted a post-Ian survey about 30 days out from the hurricane. In spite of the tremendous recovery work everyone was facing, over 80% of our members responded. And it was clear one of the most pressing issues was a better understanding of insurance, especially flood insurance, since many of us were dealing with a flood event for the first time. Our forum team, Howard Handler, Daryl Shaw, and Gene Seawald, led the development of today's program. And as you will see, assembled a terrific group of experts. We know the next hour or so will be educational and informative. And again, thank you for joining us today. And I'll now turn the program over to Howard Handler to get the forum underway. Howard?
Thank you, David. Appreciate that. And our many thanks to this large audience here. I think we have 407 people registered. That's amazing. Many thanks go to Joe Thompson, Doug Branham, Miguel Perez, and Elaine Anderson for their willingness to participate in this event today. Since there will be screens that will give the audience more detail about each speaker, I'll start by turning this over to Joe to begin. Thank you.
Thank you, Howard. Really appreciate the opportunity to be here today and appreciate everything that GSAC does. And, special thanks to you, David, and the rest of the GSAC members, and to Cindy as well, doing all the background work there for coordination on Zoom. I know it's not an easy thing to do. So, today our goal is to talk broadly about flood insurance, and for better or for worse, it's a hot topic, not by choice, as we talked about before the meeting. With Naples, with Southwest Florida, we haven't seen something like this, at least most of us have not, in approximately 60 plus years. Last time we had a situation where flood was a major impactful event would have been from Hurricane Donna in 1960. So obviously most people were not here. For those of you that might remember, I'm sure you were pretty young at that time, and development was a heck of a lot different than it is today. So we really want to get into this. We know everybody has been impacted by this to some extent, some more severe than others. So the intent here is to try to demystify some of this flood coverage and also procedurally how things are handled there. So today, myself, for those of you that are not aware of who I am, or if I've not met you before, my name is Joe Thompson. I'm with Gulf Shore Insurance Acrisure. We've been in business here in Naples for 50 plus years, specializing in condominium associations, and we have the pleasure to represent a number of associations that are part of GSAC. And I know, personally, I have clients that are majorly impacted by this. So was really happy to have Howard reach out and the group to put together a forum with this topic. And we're thrilled to have Doug Branham with Colonial Claims, cat adjusting firm. A lot of you that have had the adjusters come out on site and you've met adjusters on your property, there's a good chance many of them are with Colonial Claims. So you've probably heard that firm before. Perhaps there's another firm that you're working with that's a cat adjusting firm, but the point is they essentially function in the same manner. So Doug's going to get into some real detail on that front. So that's why we're very thrilled to have him. And we also have Miguel Perez from Assurant, which is one of the many servicing carriers, but also one of the largest servicing carriers for FEMA that effectively administers the policy and the program from a administrative standpoint. And we'll get into some of that as well. So both Doug and Miguel are gonna get into this in a little bit after I get through some of my introductory comments and presentations. So again, very, very thrilled to have these gentlemen with us today. And I think it's going to be a real pleasure for folks. And I hope everybody learns a lot. So we're going to talk program overview, really focusing solely on a number of different items. And I want to sort of enunciate a lot of these phrases instead of just throwing out acronyms, because we could get into, flood insurance ease pretty quick. So going to say the National Flood Insurance Program, or the NFIP. So we might shorthand that, farther into the presentation, or I might start doing it right away because I don't want to say the whole phrase. So we're going to talk about that, which is, it's a FEMA-driven program. It's governed by the federal government ultimately. So we're going to talk about what is the National Flood Insurance Program, and what are these policies you've been paying for years that have been out of sight, out of mind until obviously Hurricane Ian, where everybody's been impacted. Everything that has effectively been touched by the surge. You look at the surge line of your properties, and below that line is anything that was damaged from flood, and that's going to be where we're going to be focusing on the National Flood Insurance Program and the associated policy that would be applicable there. So we're going to talk about the program in general. We're going to talk about pre-firm and post-firm. A lot of you have probably heard that phraseology. Many of you on here probably now know a little bit about what that means. So FIRM is an acronym for Flood Insurance Rate Map. And there's folks out there that have a property that was built prior to a specific date, what they call the FIRM date that FEMA has established, which we're going to talk about. And if you're prior to that date, you essentially predate the flood program from a regulatory standpoint. So when it comes to coverage, there's things that some properties that are pre-firm, because of their year built, where their categorization is pre-firm, are getting covered, that properties that are post-firm, post-flood insurance rate map implementation, are not getting coverage for. So there's a disconnect, and there's also probably some confusion out there between insureds, between properties that might, one might be post-firm and the next door neighbor could be pre-firm, and the next door neighbor is getting, $1 million and they're getting things paid, and the folks that are post-firm are still going through the process and being told that a number of things are not covered because there's two different coverage determinations there within the policy. So we're going to talk about that. And what the policy we're going to be focusing solely on, primarily on, and what we might touch on the general property form a little bit, depending on the coverage questions, but we're going to talk about the Residential Condominium Building Association policy, or the RCBAP policy. So that's the specific policy that the NFIP, the National Flood Insurance Program, has for condominium associations. That's the primary flood insurance policy. So excuse me, it's very specific in what it covers, and it has a limitation of $250,000 times the number of units for your association as your max available limit for flood insurance coverage through the NFIP under the RCBAP policy. So we're going to get into that a little bit, talk about some, excess and private flood. What does that mean? Some of you might be familiar with it. We're going to talk kind of briefly about that, just to kind of set some introductory and sort of detailed comments on it so you're aware of what that product is. Then quickly, a couple of strategies to mitigate flood risk in the future. There's a few things out there that I think warrant at least a discussion, and maybe just to get it out there for everybody's edification. Touch on briefly self-insurance reassessment, because we all know about what does self-insurance mean in terms of what are you as an association already self-insuring. We'll get into what other things we need to now consider moving forward related to that. And then of course, we'll then turn it over to the claims process and perspective with Colonial Claims and Assurant. Again, very happy to have both of those gentlemen with us today. So we'll dive into that here shortly. So again, National Flood Insurance Program, and I put the FEMA decal on here because that's what this is. We're not dealing with a private insurance company. We're not dealing with a private carrier. Ultimately, the governing body behind the RCBAP policy, the National Flood Insurance Program, is the federal government. So that's just something I wanted to highlight and note, that that's who we're dealing with. We're not dealing with some adjuster that's the fiduciary agent of a private company, a carrier that's coming out there that has discretion over coverage enhancements, and maybe there's some ambiguity in the coverage language and things like that. It's a very much a one-size-fits-all policy, which we'll kind of get into in a little bit here, and we can kind of flip to the next one. I just wanted to emphasize that. So some brief things about the National Flood Insurance Program, established in 1968. So it's been around for a very, very long time. really was created to manage, flood damage and to protect properties. And ultimately it's, been put into place for floodplain management purposes for banks and for lenders for the sake of lending money to folks that want to live in high hazard flood prone areas geographically, where the bank's going to require that you have flood insurance. So that's obviously one of the big drivers behind it as well. But as I noted, it's governed by FEMA, the Federal Emergency Management Agency, which you're all very familiar with. That's the governing body behind it. That's who effectively has the policy. The policy, terms and conditions are all, they're boilerplate. It does not vary from property to property. You can't endorse the coverage terms. You can't change it. You can't negotiate additional coverages. It's not like a private company. So it's a very, very different animal. And I'm just kind of re-emphasizing that because I think there's still a lot of confusion out there with folks about, how all of this works, who's covering what, how is FEMA involved, things of that nature. So the part of some of the confusion administratively, I think, comes from the servicing carriers, because we have a number of clients that are like, well, wait a second, our policy says Hartford, our policy says Wright, it says Assurant, it has Selective, like, wait a second, who is this company? So years ago, almost 40 years ago, the National Flood Insurance Program wanted to create this, what they call the Write Your Own program, where effectively they have these private insurance carriers that are known as servicing carriers that effectively hold the policy for FEMA and they administratively handle the policy, right? But they're not changing the terms and conditions. They're just doing the administrative management of the policy on the back end for FEMA that ultimately governs it, because the federal government's not going to want to be in the business of taking care of the policy, administering it, and all of the other things that go along with the procedures and process of claims. So that's the reason why you have a number of different servicing carriers out there that are participating. So while you know that you're governed through the FEMA RCBAP policy, your policy is held by a servicing carrier. Now, the only circumstance where that is not the case and where FEMA is holding the policy directly is that if you have a repetitive loss property that we see often, where folks have many losses and then the policy goes directly to FEMA. So I have a few clients that are in that situation where FEMA actually is the policyholder on it. So that's just something to kind of clear up the process. And then ultimately, so everybody's aware, the National Flood Insurance Program is a federally subsidized program. They're currently, no pun intended, underwater financially by over $20 billion. And the events that have really been the driver for that, if you go back, it goes back to Hurricane Katrina, it goes back to Superstorm Sandy, and Hurricane Harvey. I mean, those events were massively impactful events from a flood standpoint, with Harvey dropping, I think it was like 57 inches of rain in 3 days, the most ever recorded domestically. So that resulted in a huge amount of debt for the flood insurance program, some of which was forgiven, but there's still a massive shortfall there. So effectively, it's taxpayers are, paying for this program because it's a federally subsidized program. Because when you look at the private market, which we'll talk about, it's just not, it's a cost prohibitive option, which we'll talk about in a second. You can go to the next slide. So we talked a little bit about pre-firm, post-firm, and this is really important for the properties out there. There's some properties that were built, in the 60s, and there's some that were built, obviously much newer, maybe late 70s through 80s, Gulf Shore Boulevard, mid 80s, 90s, maybe some early 2000s. Anything that's after the FEMA pre-firm date, where you have the December 31st, 1974, you're going to be known as post-firm. So the coverage that's applicable to you is going to be very different when we're talking about the area below that first elevated floor, which we'll talk about in a second, because the majority of the towers out there that don't have the units on that first elevated floor are only dealing with damage in that level. And the damage in that level is very regulated through the RCBAP policy relative to what they're going to provide coverage for. So that's why you're categorized as post-firm, is because of this date, because of the year of your construction. Actually, I think it goes back to the permit date, but we'd have to maybe kind of get one of the panelists might know a little bit more on that. Collier County's firm date is a little bit later. It's September 4th, 1979. So if you're an unincorporated Collier County, you might have folks that are getting pre-firm status that are built after that date. So that's really the basis of the pre-firm, post-firm. The city of Naples established their rate map July 2nd, 1971, just to give a perspective on history, but very much that pre-firm date is set with FEMA And the Collier County date, that's the date that Collier County had their firm map established. So that's really the basis of how they're looking at these properties from a categorization standpoint. And the older properties, yes, they are, the pre-firm properties are getting pretty much a lot, I want to say everything, but they're getting a lot covered up to the policy limits for whatever they need. You know, now obviously there's issues there with some pre-firm properties, which we can maybe get into a little bit. I'm sure there'll be questions on the 50% rule, where some folks that might have smaller buildings might run into that, where if it costs more than 50% of the market value of the structure to rehabilitate it, reconstruct it, then you're going to be required to bring it up to code if you're pre-firm. So for buildings that are not elevated to code, that don't have pilings, et cetera, that's so cost prohibitive. Obviously, it's impossible. So there's you know, anecdotal, I've heard some information about maybe a building or two along the boulevard that might be in a position like that. And it's unfortunate, but that's what we're faced with, because those buildings cannot be built in like kind and quality now under the existing building code. So it's just the nature of redevelopment along the coast. They don't want places built like that anymore because of the way that they're so prone to catastrophes, whether it be storm surge or any other peril associated with a named storm. So I just wanted to focus on this because I know there's been a lot of questions about pre-firm versus post-firm. And again, firm is flood insurance rate map for those of you that are following along and listening. We can transition to the next point. And again, I talked a little bit about this. So the residential condominium building association policy form, the RCBAP policy form, is going to be the overwhelming policy that's governing the vast majority of the folks that are listening in right now. There is also the general property form that FEMA has, which is going to be applicable to, maybe if you're listening, you're from a co-op or you're maybe on a timeshare, maybe there's a few people that have single family homes in the area, you'd be under a different FEMA policy, the general policy form. But the RCBAP, again, one size fits all, black and white policy through FEMA, governed by the federal government. And it's been around for a very long time. And I know periodically they look at maybe minor tweaks to it. I think the most updated version was a 21. And I think before that it was like a 2014 or 15. So I know there is some level of a federal review of that periodically, but my understanding is that it's a very bureaucratic process and there's some type of congressional intervention that is required for that to be changed. So again, not something easy to do, and the coverage is very much set in stone through RCBAP. So two things I want to focus on real quick, and I know that Doug will probably dig into this in a lot greater detail than I will, but under the Residential Condominium Building Association policy form, there's a number of coverage components, but there's two big ones that I want to kind of focus on. The coverage A component is going to be to some of the buildings that maybe had unit damage, where the water got to a point where it actually impacted the units, depending on where they were situated. There's additional coverage associated with that, over and above what the other coverage item, which I think is more of the predominant coverage item that we're running into for folks relative to the claim circumstance, where the other coverage item where the units were not impacted, where we're just talking about items of property below the lowest elevated floor of an elevated post-firm building. Okay, so if you're walking up to your building and you're walking into a lobby and above your head are the units effectively, and everything was damaged was below that, that's the area that we're talking about, where there's and it's classified as a coverage limitation, but there is coverage. There's 17 items that are actually covered, including cleanup to a certain extent. And I know there's a certain methodology that they use for cleanup, depending on the severity of what's necessary for cleanup. But I want to focus on that. But I think there's been a lot of confusion, between properties about these coverage components and what does the RCBAP cover and what does it not cover. So we're going to talk a little bit about that. And I've snapshotted some pieces here from the RCBAP that we can focus on. And I know we'll get into some more detail on in a bit. So this is kind of hard to see, but I snapshotted this directly from RCBAP policy form, and this is the coverage A component. Now, if this is really if the units have been compromised by the surge, so there's a number of different items here. Some of which there is some crossover in the next part of coverage, which is the sort of the below the first elevated floor. But if you look at the P, which is hard to see, talk about in the units. They actually go as far as covering appliances. There's dishwashers, microwave ovens, hot water heaters, kitchen cabinets, plumbing fixtures, ranges, refrigerator stoves, etc. So those are things that would be applicable again if the units had been compromised. So if we had been dealing with a surge of much greater intensity, which thank God we didn't, it was already bad enough, and we had buildings that had a number of their units compromised, we'd be looking at a different level of coverage trigger for different building and components that would be applicable. Some, for example, fire sprinkler systems, fire extinguisher systems would be part of that, which is not part of the other piece of coverage that I mentioned where the units are above your head and you've only got damage below that. So this is a little bit more of a robust and additional essential building component coverage that is not in the other piece of the RCBAP, which we can transition to the next one. So this is what most of us are dealing with. When I say on Gulf Shore Boulevard, at least a lot of my clients are dealing with the below the lowest elevated floor coverage, where we had the surge, came in, washed through the lobby, came through the garage, things of that nature, but didn't get to a unit, thankfully. So we're dealing with a little bit more of a limitation here for what they're covering. And again, at its heart, the FEMA policy is very much just really described as a catastrophic policy, because one of the things I want to focus on is item 17, which is of critical importance, because this is a policy that would effectively cover any foundational structural integrity issues, right? So, a lot of the newer buildings, you're not going to have that because you're meeting the code. The flood did what it's supposed to do. It came in, washed through the garage, came through flood vents, washed in and out, and the structural integrity of the building is maintained. But for the buildings that might be a little bit older, that are not built to the newer codes, are not that fortunate. So that's the purpose of this coverage. At the heart of what it's providing for this area is that if you have any foundational issues with footings, pilings, other walls, etc., that's covered under this policy. So other things that are provided in this, which have been pretty helpful, not everything that we want, obviously, because it's not a private policy like a property insurance policy. It's very different. They're going to cover electrical to a limited extent, electrical outlets, switches, junction boxes, circuit breakers, and then there's limited coverage for elevators as well, which I'll let Doug kind of jump into some more of that. But my understanding in post firm is that the cab is usually covered for some of the buildings where maybe the cab wasn't able to be raised in time. And I know there might be a limited electrical component is there as well that would be covered. And then there's some other pieces in here as well that may or may not be applicable. One that's noteworthy is required utility connections for any of the items on the list. So there's definitely coverage here, but what I want to focus on is that this is the coverage. Okay, there is no ambiguity here. There's no interpretation. This is a tried and true policy that's been around for a very long time through FEMA, and this is what they're going to point to as coverage. The exclusions are also very clear in the policy. It's really, for better or for worse, it's a one-size-fits-all policy. It's the federal government. I mean, we wouldn't expect anything less from the federal government than, hey, this is going to work for everybody. Let's just put that in place, and that's what they've done. But the heart of this is really the structural integrity component of it. And that's why we have that $250,000 limit times the number of units. Heaven forbid you ever have structural integrity issue problems, you're going to soak up that limit pretty quickly to shore up your building. So fortunately, we don't have that many buildings that experience that, but we do have a few from what I understand. And we can transition. Oh, I'm sorry, real quick. Cleanup is in there as well. It's the last item under 17 under B. And maybe Doug can touch on it a little bit more when he talks in a second, but cleanup, I know there's a range that they can provide from what I've gathered from talking with various adjusters, some of which that work for Colonial, others that work for other CAD adjusting firms, but there's a range that they can provide depending on the extent of cleanup and within the building envelope. Okay, I'm not talking outside of the building. I'm talking about where the flood policy applies. That's the footprint that the cleanup is going to be applicable towards. It's not going to clean up the rest of your property in the pool area and other debris and things. That's not what it's doing. The flood policy is attached to a physical location, and that's how we have to think of cleanup from that standpoint. So when we're getting our invoices prepared, make sure that that's itemized and spelled out clearly so you can accelerate the claims process and you don't have to get with a back and forth with the various adjusters that you're dealing with. So real quick on excess private flood, some clients have this on Gulf Shore Boulevard, others do not. what this is essentially designed to provide is that you have the NFIP, okay, and you have the $250,000 times the number of units. And in many buildings, when you look at the appraisal, the flood insurance replacement cost is much higher than what the FEMA maximum limit available is. So there's some insureds that purchase excess flood, which bridges the gap, creates a differential, and gives you more limit over and above the FEMA primary limit. So I've had a lot of comments since Ian saying, oh, well, this is a huge waste of money. We're barely getting anything from FEMA because we have just damage below that first elevated floor. Why are we wasting our money on this? You know, to some extent, I can kind of agree. It's very much a risk tolerance policy. But conversely, you could say, well, what if we had a surge that had damaged the integrity of the building and you soaked up your primary limit through FEMA, and then you were bare for another $5–10 million that you'd have to pay out of pocket to fix the structural integrity or any types of issues you have with the foundation. That's a big problem. And that's really what excess flood is designed for. And that's why it's so important. Maybe a little bit more important for buildings that are not up to code and aren't designed to take on a massive surge like the newer construction is, but still, it's worth a conversation in terms of, you know, edifying the board so they understand, you know, what this product's for. And the question comes up a lot, well, why can't we just go to a private carrier? Why do we need FEMA for the primary? Well, it's cost prohibitive, okay? When you look at the geographic area and you look at the risk that we're dealing with flood, whether you're, you know, on the coast or on a barrier island or an island, either coast of Florida, there's no private carrier out there that's going to want to jump up and down and come in and be competitive and compete with a federally subsidized program. It's just not going to happen anytime soon. And the few folks that we have with private flood are ones that are farther inland that, you know, are pretty much in an X zone. And even then, it's still an expensive product for them. So the only time that the private market really makes any sense is when it's in an excess position over FEMA. And keep in mind, it's a follow form policy generally, meaning that it's not going to provide you any enhancements over and above what the RCBAP is providing. It's just going to drop down and provide additional limit over and above what you expend, you know, through the primary limit that you purchase through the NFIP. So just some information on that, you know, as folks go forward and either analyze their excess flood policy or consider purchasing one. I think for the co-ops, this is highly advisable because they're very limited on what they can purchase. They can't get an RCBAP policy, so there's more limitations there. But for condos, it's something that's worth a discussion. And I think it varies and depends based off of the variables of your building. So real quick, a couple quick things, and then we'll transition to the claims discussion. Some strategies to mitigate flood risk, you know, in the future. There's a number of companies out there that do flood paneling. I'm not here to endorse any of them. I mean, I know a few of them, but again, these clearly would have done nothing for Ian based off the fact that they're about 5.5 feet. So I know the technology exists to use these, whether you fortify the whole building for first level openings, or you can do specific infrastructure you might have around the property, maybe a generator that's at the base flood elevation, or, you know, other, you know, infrastructure like pumps and things of that nature. But it might be worth, you know, exploring and discussing whether or not this is a feasible option and, you know, what the cost would be. You know, the only issue that I think I would want to know more information about is the integrity of these panels up against a surge like Ian produced, because again, Ian blew out concrete subfloors in buildings, you know, in Sanibel and Fort Myers. So I personally saw doors, you know, garage doors blown out, steel doors crushed, you know, along Gulf Shore Boulevard. So I wonder about the integrity of this product. So I think there's a lot more questions that would need to be asked, but I just wanted to throw it out there to the group that this type of technology does exist, and it is deployed throughout the state in various capacity, but it's just something to keep in mind as we move forward to try to mitigate this, and hopefully we never have to deal with it again. But again, we don't know. That's the whole nature of, you know, insurance and these catastrophic risks that we deal with. The other piece that we're seeing more of is parametric insurance products. And some of you might be familiar with this from IRMA. There's a number of products out there. And again, I'm not here to specifically endorse any single one of these. I just want to put it out there as education to the group, where this is really related to a specific coverage trigger, this particular product, whether it be the level of surge, whether it be a certain wind speed that an anemometer measures on your property or somewhere, depending on where the anemometer of the carrier positions it in the state. And there's a new one out as well that is related to your geographic location, how close you are to the eye wall when the storm makes landfall. So those triggering events result in a payout. And the payout can be used for any purpose whatsoever related to uninsured losses or whatever reason, whether it's surge damage that was uninsured, et cetera. But there's more of these products out there. This particular one is related to measuring the level of surge on your property, and they actually install a device on your property to measure that. So again, there's a number of these products out there, but I think, as we weigh this risk in the future and look for strategies to mitigate it in terms of finding additional funds to cover these risks, these types of products exist. Again, it's a risk tolerance product, just like excess flood. We could go another 63 years without a storm surge. Nobody knows the answer. So we have to weigh the negatives and positives when we look at these products, but this is just another one out there in the marketplace that we're seeing because of this risk gaining more traction. And lastly, I just want to talk about self-insurance and kind of reassessing that from the perspective of, I don't mean so much like self-insuring that we're not going to have insurance, because that's a whole nother conversation, because you want to truly self-insure. There's a commercial self-insurance statute that you have to be in compliance with, which is a very complex statute that effectively would require an association or a group of associations to create an insurance company and get it approved by the state and effectively create a captive with sort of a stop loss limit. And nobody's done that in the state, to my knowledge, and I'm not aware of anybody that's gone through that process. So when I'm talking about self-insurance, we are all self-insuring to a certain extent. Everybody has a deductible, whether you're at a 3.5, now we're seeing 7.5%, 10% deductibles on the property because of the market crunch that we're in. But now we have to think about other things too. When we think about the surge risk, and we know what the limitations of the RCBAP policy are, we have to think about things like landscaping. I mean, that's a major aesthetic deal. In Naples and Gulf Shore Boulevard, it's a beautiful component of these areas, and that's something that is just not going to be covered. There's really no product out there. There's some limited landscape coverage for certain property policies at a very small sublimit, but for flood, that's just not going to be part of what they're going to provide any remuneration for at all. Pool areas are a big deal, for this group. A lot of pools were destroyed, pavers uplifted, things like that. Those are also things that we have to think about now, because from a wind standpoint, we're like, we're not worried about the pool or, the pavers, what's going to possibly happen? Maybe a tree falls on it. But now with the surge pressure, it's a huge problem. So we know going forward that we have to consider this and really, find a way to potentially, will we set aside funds for this, or we consider parametrics, or we try to do different flood mitigation measures like the panels. There's ways to look at this now that I think we have to look at it from a different perspective because of what happened. And again, it's just been an out of sight, out of mind peril until now, but it's very much front and center. And that's why again, I'm thrilled to be able to transition this now to Doug Branham from Colonial Claims, who I think will get into some really good detail on their perspective and view. And Doug, if you want to introduce yourself, you're welcome to do it. I think that would be a great way to transition.
Good morning, and thanks, Joe. Can everyone hear me fine?
Yes, sir.
Okay. I have been in the flood business since back in the 1970s, and I grew up in the hills of Eastern Kentucky, and that's why you hear this hillbilly accent that I have. But we had a lot of flash floods up there in our lifetime, and even this summer, if you recall, there was a bad flash flood in Kentucky that drowned like 40-some people. So I was hired into this industry to start working in the flood program. And I grew a company following the flood program around that we have become the largest service provider of adjusters to the flood industry. So we've done this forever. The biggest thing that I see wrong in the flood program is the perception that people have that I'm not in a flood zone. I want to correct this. If I teach you anything at all today, everyone is in a flood zone, it seems. And Joe mentioned how much money that was lost in events like in New Orleans, Katrina, and Harvey in Texas and Houston in 2017. In 2017, only 20% of the insureds in Houston had flood insurance. 80% assumed that because they were in an X zone, they're not in a flood zone. But everyone is in a flood zone, and everyone needs to carry it. And the people in these condominium buildings, even if you're not on the lower floor, your building can be undermined by wave action and you can collapse. And we've had buildings 7 and 11 stories high that have collapsed from flooding and have damages from flood events only from the bottom of the floor to the top. So the thing I want to try to teach you today is a little bit more about how the RCBAP program works as opposed to the dwelling policy. So flood determined a number of years ago that they could not work the program around the individual condo docs of each association. So what they did is they came up with a policy, the RCBAP, and they said, hey, we're going to use this RCBAP, and the federal law is going to oversee the state laws and the condo docs, and we're going to pay for everything under the RCBAP policy in the dwelling. So they gave each unit in the dwelling the same limit as an individual house has of $250,000. So a condominium with 10 units should theoretically carry 2.5 million in insurance. And within the RCBAP, we have the same coverage as you would have in the dwelling policies, and they have the coverages listed for pre-firm and post-firm losses. Now, most of the RCBAPs we see today are post-firm buildings, meaning there's restrictive coverage in those lower areas. Joe showed earlier the building items that were covered, or the items that were covered as building items in a policy, and then he briefly showed you the excluded items. And that excluded items page, to me, is the most important page of the policy, because it covers what we're going to pay for in these restricted areas and what is going to be excluded. And there's 17 items in that we cover, and most of those 17 items always are affected. Well, sometimes you don't have cisterns affected, but they're the items that are affected most. And the only 2 items that I can think of off the top of my head that we have a lot in these condominiums that aren't covered are the fire suppression system. It is not a necessary utility according to FEMA, and the telephone systems. So those are excluded, but you have your elevators covered, and they are covered with limited coverages if they're built after, I think it's September of 1987. We only cover the cab and the control panels. If that elevator was installed and built before 1987, everything is included in the elevator, but it has restricted coverages after 87. So we're going to pay for your dwelling coverage under the RCBAP, and occasionally insureds will have their own dwelling unit coverage in a RCBAP. Now, this is an excess coverage at that point in time. If, say, for instance, the RCBAP doesn't pay their premiums, you are covered. If the RCBAP is exhausted and you have this dwelling coverage for your unit, then you can apply that dwelling coverage to the unit. The contents in these RCBAPs are for the common areas only that are owned by the RCBAP. So if you have contents in the area that is restricted coverage that are yours personally, it won't cover yours, but the contents in your unit will apply under your unit policy that you have with the dwelling unit claim. Now, when you have a contents loss, or when you have any loss, everybody has a camera. Take a picture and photograph and document your items. Try to make a list of them, and if you can, get the model and serial number for the adjuster and have it available so they can speed check it, or if these items are discarded, we'll know what your unit, what your contents were, so that we can replace them with like, kind, and quality. Protect your undamaged property and separate it. Have pictures of each by room. Many times our adjusters will ask the insureds to help prepare a contents worksheet before they get there, so that they can go through the contents items and agree that these are damaged, and what the replacement cost values are and ACV are. Anything that's a big ticket item like a piano, we set a guideline of $500 or $1,000. We always want a picture of every item that's at that actual cash value, and just help us document your claim. The adjusters are there to help you complete your contents worksheets and fill them out. If you're not getting support and help from your adjuster, whether it's a colonial claims adjuster or someone else, you need to talk to them and get their attention. It always gets my attention when someone complains. We work with a number of experts in dealing with whether it's with the contents coverage or anything else. We ask that you don't lump sum items like clothes and put clothes down for $5,000. You know, we want you to list clothes like women's shirts or skirts, women's shoes, men's, and divide the items out to where that total, sum total may come to $5,000, but we don't want it in a lump sum. And we cannot pay you to move the items out and store them, but we can, the policy does provide for you, if you pre-storm move and take your contents off premises to a higher area, there's $1,000 limit for your policy for that, for moving your contents out. The RCBAP serves as the primary policy. We're going to pay for all exterior and interior damage to the policy. And this is federal law. Now, some people have experts, and we honestly, as adjusters, we don't know everything. I can't tell you that every adjuster we has the ability to price out your electrical system, to price out your elevator and tell what the repairs are. So a number of times we rely on experts to do that, and we take their bids, and if they sign a contract with it and it looks like that it's a legitimate amount that's for the repairs or the replacement of the item, we'll put those on the bid. We have to watch sometimes. People will get bids on items that aren't necessarily damaged or aren't covered. A lot of times people have experts come in and help them. And in our industry, we run into a lot of times where the people use public adjusters. It doesn't bother me from a standpoint if someone wants to use a public adjuster. If they ask me beforehand, I tell them, you know what, why don't you let us write your estimate up if you're not happy and you want to get help, or if you're not qualified to handle your own loss. If you're seasonal residents, you might want to get some help from an expert, whether it be a contractor, a PA, an attorney. But in the flood program, the flood program works that we are paid off the gross loss. And when I say we, I'm talking about not only the adjusters, but the carriers as well. And the reason we're paid off from the gross loss is it takes us longer to handle a $100,000 loss. It takes us much longer to handle $1 million loss than it does for us to handle a loss where there's no claim or we pay $10,000. So they're paying us for our time. And when we go out on losses, I always like to have the insured standing beside me and standing with me. And I give them one end of the tape measure and I take the other and I say, okay, put this against your wall, and we measure all the rooms and everything in that room. I name to them what we're going to pay for. So this is called scoping the loss. In scoping the loss, I'll make notes on my manila folder that, okay, we're going to clean the floor, we're going to clean the walls, we're going to replace the carpet in your building, we're going to replace the subfloor if it has subfloor. I'm going to replace the baseboard and paint it. We're going to the water got 3 foot high. We'll replace the sheetrock walls 4 foot. That wall over there that has paneling on it, we can't replace it 4 foot. We will replace that panel wall 8 foot. This wall beside us over here that has wallpaper on it, we will pull off the lower 4 foot of the wallpaper as we take our sheetrock off the wall. And then that upper 4 foot of wallpaper, we have to scrape it off, and we will put the sheetrock back up and we'll paper the entire wall. Now you have 1, 2, 3, 4, 5, 6. You have 6 electric outlets in this room we're going to replace. We're going to replace your door and paint it. You have a closet over here with a bifold louver door. We're going to pay this bifold louver door and replace it. And I asked the insurer, is there anything in your room I missed? And they will normally say no. And you can usually see the insureds looking at each other and thinking, hey, this guy's here to help us and he's here to pay it all. So we go through every room, naming the item that's damaged and what we're going to replace. And if there's something that isn't covered, like their fence, it has washed down, or they're in these restricted areas in an attached garage that's below the lowest elevated floor. In those areas, we tell them why we can't, we show them in the policy. At the end of scoping these losses and taking our pictures, we write a building worksheet. We give each insured the building worksheet, and we say, now go back and compare this to your room. And if there's an item that's omitted or underpaid, tell us what it is. And sometimes we will get an estimate from a contractor, and their estimate might be higher or much higher than ours, or from a public adjuster and it's higher or much higher than ours. And the first thing I tell them to do is take our worksheets that we wrote in each room that are unit by unit, that are named, what we're replacing, what the cost is, and tell us where any item is omitted or allegedly underpaid. And if you point that out to us, we'll change the estimate today. We're not here to cost anyone a penny, and FEMA audits they don't audit every file. They don't have the time to, but they will audit at least 10% of our files, and they do not want us to underpay you by a penny or overpay you by a penny. And we get as much problems with underpaying losses as we do overpaying them, because that's determined to be an error, and the error is credited to the insurance carrier who we're working for. And if the insurance carrier has too many errors on these audits, then I don't know if FEMA penalizes them. They can throw them out of the flood insurance program, and that carrier then is mad at us, the adjusting company, whoever it is, who either overpaid or underpaid a claim. So it is a subjective attempt that we're making to please 3 parties in these events. And that's, we need to please the carrier, and we need to please the insured, and we need to please FEMA. And all of us have to work together to get to that point in time where everybody agrees that this event is handled correctly, we should be able to do our repairs from here. But if we can't, and you can honestly show that this door that we paid you for costs more, or we weren't allowing enough for you to get workers in, because you're in a very tough area down here in Southwest Florida. I honestly believe that we're going to have multiple losses reopen. We can pay for something today. You folks might not get your bridges and roads and infrastructure completed till February, March, or April. And the cost of supplies may be higher than we're allowing today. The cost of labor may be higher than we're allowing today. You can come back and apply for a request for additional payment. Normally, you sign a proof of loss, and a proof of loss just says that it's kind of the reverse of an IOU. The proof of loss says you owe me this much money for these items that are named here. And if those items aren't named, then you still have the opportunity to come back and name those items later if the adjuster misses the damages. So that's kind of how the RCBAP works. It's how we scope and look at the damages. It's a recap of the way journey through the loss from the time we first get to it until the end, and we recommend payment to the carrier, and then you can always come back to us. Now, I'm always open to anybody if they have questions or comments. You can follow up with us. This sheet right here comes out of the policy, and this is a FEMA form, and this is exactly down here, starting with, this is number 8 here in the middle of the page, and it tells in red these blocked off items, what is and isn't covered in the building, and then it has cleanup, and the cleanup is only for items in the building or under the building. Nothing out in the premises, in the parking lot, none of that cleanup is covered. What is insured is your risk, and the risk is your condo building. Now, the first red box on the bottom left and the top right is for the building. Over on the bottom right-hand side, it's for the covered contents. And those contents are air conditioning units, portable or window type. Your clothes washers and dryers are contents items. And the food freezers, other than a walk-in freezer, and the food in any freezer are covered. And that's what the coverage is in a post-firm elevated building in a special flood hazard zone area. So is there another slide, Sydney, or I filed the claim and now what? I think this is a point in time where Miguel is going to step in and explain to you what the carriers do with their information.
Miguel, you with us? There you go.
Yep, I was having trouble getting off mute. Good morning, everyone. Can you guys hear me?
Yes.
Okay, so thank you everyone for the opportunity to present with you guys. I'll finish the last piece of the presentation. I have very big shoes to fill after I have to present behind Joe and Doug, as they did such a great job and provided some very good information. So I'll introduce myself. My name is Miguel Perez. I'm the claims flood manager with Assurant, which is underwriting by American Bankers Insurance Company of Florida, who is a flood provider for private flood, among the second largest write your own company under FEMA's NFIP program. So I manage the flood business here, been in the industry for 18 years, and I wanted to give you guys a little education from a carrier's perspective, tie into a few things that Joe and Doug said, which ties into the whole process. So like Joe mentioned earlier this morning, the NFIP program is under it's a program under FEMA, and there's about 83 companies, write your owns, they're called WYOs, companies that service the policy under FEMA. I'll refer to Assurant and refer a little bit more to the industry as well, as you might have policies with other carriers or other competitors, but it's all black and white under FEMA's NFIP program. So I can kind of speak in general for all of us. So when the claim is reported, it gets assigned to two different folks. It gets assigned to an independent adjuster, somewhere like Colonial and Doug's area, who their responsibility is what Doug was explaining, coming out to the loss location, assessing the damages, scoping the loss, taking pictures, walking the property with the insured or the representative, and quote unquote was called, doing the field work. At the same time the claim is open, it's assigned to an in-house examiner. That in-house examiner, it's an adjuster that works for the insurance company. So there's two different folks you're dealing with. You're dealing with the insurance company. So the policies through FEMA, it's serviced by the insurance company. The insurance company dispatches, signs out, hires an independent adjuster, which is somebody like Doug's company and Doug's adjusters. All these adjusters involved have been vetted and approved and trained through FEMA's NFIP program. So they're not just random adjusters that are looking for work and trying to help. These are flood specific adjusters that have been certified through FEMA at the federal level, and not just your general property and casualty adjuster that's picking up claims from different carriers and different perils just to make some extra money. The write your own, the insurance company, has full authority to act on behalf of the NFIP. So we have the authority to pay and adjudicate claims based on the policy. They are carriers in the flood industry that do not have their own employees. So for example, Assurant, we do our inside examination within, as we're a big carrier. There's other carriers that are smaller, or other big carriers that are smaller in the flood space and are not flood experts like Assurant is, for example. So they might hire a third-party vendor like National Flood Service or Torrent Services. These are like third-party vendors that will service the policy on behalf of the insurance company, but will still involve the field adjusters like Doug's group. So ultimately, the carrier, FEMA's going to hold us, the carrier, responsible for everything. Like Doug mentioned earlier, if we dispatch Colonia, for example, to do the inspection, and they have some kind of errors like Doug was mentioning, FEMA's going to hold us accountable. And Doug mentioned earlier that there's penalties for that. Yes, there is. They do random audits, and if we're not in compliance or accurately handling these claims, there's a few different consequences. If we overpay a claim, we have to get our own personal money and pay FEMA back as we process these claims with U.S. Treasury money. If they catch an underpayment, we have to, issue that supplement to close that gap. And then there's consequences from that. If you don't pass those audits or have good results, the consequences are you get more, they audit you more, you're more on the radar. There's fees and penalties that you have to pay for the deficiencies. And ultimately, if it's bad enough, I don't know what the rules are because we've passed every single audit. Eventually you will be thrown off the program if you're not in compliance with all those guidelines. The write your own carrier will work with the IA firm, the independent adjuster that goes out to adjudicate the claim based on FEMA's regulations. So at the same time, the field adjuster is out in the field working with the insured on doing the inspection. The inside examiner is inside reviewing anything that needs to happen within the policy. So if there's something, making the contact, introducing themselves, explaining the process, if there's any underwriting or any lien holder, anything that needs to be fixed in the meantime, they make those revisions then. But ultimately, they really can't process the claim or finalize the claim until they receive the final report, the full package from the field adjuster, which includes the estimates, the pictures, and everything we need to finalize the claim. Next slide, Cindy. So most importantly, the inside examiner will be the one that issues the check. So the inside examiner is in charge of everything, the claim from top to bottom. The field adjuster is responsible for all the field responsibilities, scoping the loss, the pictures, the whole package to come up to the carrier for processing. Next slide. So I want to talk about a few things that delay a claim. This question comes up a lot, or especially after this hurricane, there was so much disaster, and folks are asking, why isn't my claim done, or what's the delay? So there's one of the biggest things that delay claims could be underwriting issues. Looking at the slides here, I outlined a few underwriting issues. So the property is not the property is not properly rated. So when the policy was written by the agent, it was written for that it had a basement. But when the field adjuster gets there, we realize there is no basement. So at that point, we're obligated to correct the policy. So the policy could have been properly rated for 10 years and you probably paid the correct premium or not. But at the time of the inspection, at the time of the claim, there was an inspection. And from that inspection, it revealed that something was improperly rated in the policy. If it had a basement, or if it was primary residency, but it's a seasonal, or your lien holder sold your loan to another lender and we have the wrong lien holder on it. So as we learn these things during the inspections, these things have to be, the field adjuster has to provide those updates to us. And in the meantime, where they're working the claim and trying to finish the estimate, the inside examiner is sending those notes or that feedback to our underwriting department to correct that policy, like that when the final report comes in, these issues are fixed. Next slide. Other reasons that the claim is delayed, appraisal or evaluation is improper or missing. This is very important. It's like your co-insurance penalty. This is what determines if the claim will be paid at a replacement cost value, an RCV, or if the claim is going to be paid at a actual cash value, ACV. So the difference there is the value of the damages less deductible versus the value of the damages less deductible and less depreciation. One of the very good things about the NFIP program, if you qualify for replacement costs, the policy does not deduct it. You get the replacement costs up front, which regular traditional property and casualty policies, it's different. If you qualify for replacement costs, it gets deducted from the settlement, and then you have 180 days to show proof that those repairs were done to get your depreciation back. So I love this about the NFIP program because you guys get the money, the replacement costs up front. Other reasons that there could be a delay in the claim, the estimate that we received from the field adjuster. Mind you, this estimate from the field adjuster is written by a human being who is out there trying their best and trying to be as accurate as possible. But there's scenarios where something's missed or something's wrong, and that report gets uploaded to the carrier. And when we review the claim to process it, we catch it and we send it back. So depreciation wasn't properly put on the estimate, the deductible was wrong, something not covered was added, or there's some kind of issue and it has to go back. Another thing that would cause a delay is engineer involvement, engineer reports. So a lot of surge damage during Ian, which created a lot of structural damages, and we need the involvement of an engineer to help us determine how that damage occurred or how we need to put our estimate together structurally to put that building, to properly pay to put that building back to pre-loss condition from that structural perspective, right? It's a lot different to write an estimate for water damage than to write an estimate for half the bottom of the building ripped off from the surge, right? It's a complete different animal when it comes to creating that estimate. Next slide. Other reasons that cause delay for the claim, you know, we have to review other insurance policies, especially on the RCBAP. Folks have, there's like the HOA policy, individual owners have their own policy that we know about or don't know about. So there could be a little bit of delay there as we try to sort that out to make sure we're not paying somebody twice. Because that's not allowed by the program. Confirmation to like on the HOAs when it's not your regular single family home. Sometimes there's delays confirming who is like the authorized person to make decisions for this HOA or this property or this community because it's a commercial or it's a RCBAP policy versus a single family home. Prior losses too is another big one. If there was a prior loss on this property and a claim was paid with the new claim now for Ian, for example, we have to look at the prior loss and see if those items that were previously paid were repaired or replaced. So if they were not repaired from the past and damaged again, that they're not really, you didn't really suffer a loss. That's not something that was going to be added on the estimate. Or if you had a prior loss and we could see that, you know, the AC unit that we inspected 2 years ago and we took a serial number of that sticker is not the same AC unit that is at the property today for Ian and it's damaged again. That's easy. We go back, we check that and we could include it. If we go back and it's the same unit and it was already paid, it won't be included in the estimate. So that's an extra step that could cause a little delay. If that prior claim was with another carrier, we have to go through the process of requesting it through FEMA. FEMA requests it from that other carrier. So there's a little delay receiving it. And then that's an extra step to review. So, you know, something else that'll cause a delay here. Next slide. Okay, so this is a big one. And Doug and Joe touched on this. So you receive your check, but it wasn't enough. And a big part of this presentation is, you know, in Joe's opening too, is education on insurance, education on the flood and NFIP, what's covered, what's not. So a lot of elevated homes that have restrictions in that lower floor, that's where the majority of the damages is, but there's very limited coverage there. So when you stand in front of your property and you see all these damages, you know, you see the wind damage, you see the flood damage, you see the surge damage, and you're getting all these quotes and all these prices, and then you look at the flood estimate, and it's like, it's not enough. So that's where you gotta separate, you know, what's wind, what's flood, what's surge, what's covered, what's not. So, you know, post-firm elevation restrictions, basement restrictions, things like that are not gonna be in the estimate. Even though those damage, though that piece of the property and those items are damaged, and you're getting estimates from contractors on that, there's going to be a difference in the estimate because those items won't be in the estimate. Joe spoke about, you know, the outside stuff too, right? The fences, the pools, the driveways, the decks. You know, looking at the area where Ian made landfall, I don't think I've seen a claim that doesn't have a pool with damages. So a lot of partial denials there for pools. Fences are popular in the storm because, you know, you get knocked down from the wind, not covered. A lot of beautiful landscaping on these properties, all those sorts of items that are outside the footprint and specifically not covered are not going to be covered for these type of events. So there's big differences on the estimates when you start excluding these things. Another big one, the property is not insured to value. So the co-insurance penalty would apply. That means they'll get paid for actual cash value, like I explained earlier, and not replacement costs. So that whatever the depreciation is on those items, the policy will not pay for. So there, there's going to be out-of-pocket expenses there because there's less money on the settlement. Another thing, I mentioned earlier, the prior repairs. If there was prior damages there that weren't corrected or fixed, won't be on the estimate. Contractor's estimate, and it wasn't signed or itemized, so we couldn't really use it. We can't just accept, like Doug said, we can't accept a contractor's estimate that says, $200,000 to fix this property. It has to be itemized and detailed. When we get those itemized and detailed estimates from the contractors, we compare it to our estimate and see where the differences are, which is my next slide. Cindy, if you could move on to the next one. So if you receive that settlement check and it's not enough, or we miss something, that's fine. That's not a full and final settlement. Can you go back one, Cindy? So the adjuster is going to go out there and write an estimate as best as possible, and we'll pay what's called the undisputed amount, right? What we feel is covered and what we feel, everything that we were able to inspect at the property. If there's a supplement claim or something additional, that's not a problem. We will review it. Traditionally, supplements are for omitted items. So the adjuster that was out there didn't put something on the estimate because person missed it when he was writing the estimate, and or it wasn't visual to us. So there was hidden damage behind a wall or hidden damage behind debris or something that we couldn't see on the initial inspection. And when the insured or the mitigation company or contractor, whoever starts doing the repairs or start doing the tear down or get further into the damages, there's additional damages that we weren't seeing, is not in our estimate, or just humanly missed it. That's very normal too. We get supplements for like 3 different things. 1, stuff that was missed. 2, it's not covered. That's why it's not on the estimate. But, there's a difference in money, obviously, because there's damage to something that's not covered. Or number 3, they received a contractor's estimate or started the repairs, and there's some kind of differences. The difference in pricing or whatever, it could be a different in measure, like we had the wrong measurements or the wrong pricing or the wrong grade. The carpet was some kind of high-end carpet and we put a low-end carpet. Whatever the case is, we'll review it. Once that review is done, we'll pay for what is owed, and we will explain in writing what was not included and the reason why. Next slide. So the escalation process, if you don't agree with the estimate or you don't agree with the process, there's option. It's not like Joe said earlier, it's highly regulated by FEMA. We have to obey by the policy. Nobody here has the authority to pay more than we owe or pay less than we owe. Our job is to pay what we owe. If an item's worth $10, we don't pay 12 and we don't pay 7 for the item because we say so. It doesn't work like that. Doug was mentioning earlier about public adjusters. Public adjusters, the carrier, the field adjuster, nobody has authority to pay more than or less than what is owed. If there's a disagreement, the first escalation process through the NFIP program, and one I highly recommend, is to reach out to the person you're working with. Reach out to the field adjuster, reach out to the examiner, and say, hey, so-and-so, we have these differences. They should be able to address that with you and take care of that with you. Take care of it as far as, I missed it, let me add it to my estimate, or, hey, it's not covered, here's why. That is addressing the issue. If you still disagree with that, or you weren't properly helped, the next escalation process will be like escalating to your insurance carrier or to the manager at the insurance carrier. Also, you could escalate to your agent. I use Joe as an example. As you guys can see, Joe has a lot of experience and is very involved with his business. I'm sure if any of you guys will call Joe with some kind of disagreement, we could try to take care of it for you, or at least give you another or different or better explanation of why it's not covered. The FEMA publications are public. You could go into Google and Google FEMA NFIP RCBAP policy or dwelling policy, and it'll come right up with public records. You could also Google any FEMA bulletins, they're public records. If your claim was 100% denied or partially denied, you have the ability or the option to file an appeal with FEMA. So you've already talked to your field adjuster, you've escalated to the manager at the carrier, you've escalated to your agent, they took care of you, or they gave you an answer that you weren't satisfied with, and you felt a need to further escalate. You could file an appeal with FEMA. Every time a claim is fully denied or partially denied, the directions of how to file an appeal through FEMA will be provided by the carrier in the letter. Regardless if it's assured or not, it's a FEMA requirement to provide that language. You can follow those steps. Pretty much, it has directions of where to submit your complaint to. So you have to send up your summary of what you're disputing or what you're complaining about. It provides supporting documentation for it. It helps. The process with that is there's an appeals branch at Washington for FEMA who they review your complaint, they reach out to the carrier and request the entire file from us. So then when they get the file from us, they look at the entire file, they look at your complaint, and then they make a decision. They'll reach out back to the person who made a complaint and say, hey, I reviewed the claim and they properly took care of you and there's nothing else we could do for you. Or from that complaint, if the carrier or the field adjuster missed something, or in that complaint, there's additional information that was sent over that we didn't have in the file before, and now something needs to adjust. So FEMA reviewed it and they're like, yep, the adjuster missed this, or here's new information that we need to address. If that's the case, FEMA will tell the carrier or tell us, hey, we reviewed the appeal and this is our observation. These few things were missed. You have to take care of them. Or we reviewed the appeal. Everything's fine. I'm sorry you're disappointed. I'm sorry you filed a complaint. Here's the explanation why nothing's going to change. So that's kind of that's the appeals process. So that's all I have in my presentation. Just want to thank everybody for the opportunity to be here and to present to you guys what we do. And I guess we're going to open it up to some Q&A now.
Yes, Howard, can you unmute yourself?
There we go. All right, here we go. Looks like we have 21 questions. So we'll start at the top, and one I'm going to throw in that did not come from the audience, but it's one of the most common questions among our GSAC members is whether to hire a public adjuster or not. Can anyone field this quickly? We do have 20 questions, so we'll have to kind of, move quickly through these.
Howard, my experience, we have worked with some public adjusters for 40 years already. I'm not talking about as a group, I'm talking about individually. So the public adjuster can help you put your documentation together. They can be there on site to represent you if you're off site. But as far as me saying that a public adjuster is going to get you paid more than we're going to pay, it's not going to happen with Colonial or other companies, in my opinion. It's a service they're giving you. They're selling their time and expertise, but we're going to pay everything that's covered and everything that's damaged up to the policy limit. And whether you have a public adjuster or not, we don't care.
Thank you, Doug. Appreciate it. The next question is, does the COA, the Condo Association, have to pay the deductible for first floor owner's payout? Anyone want to field that one?
The deductible is applied to the building loss. If the building loss is greater than the policy limits, no deductible is applied. If you have unit owners who have their own dwelling policy, and instead of using that dwelling policy, that unit policy, they collect under the RCBAP policy, everyone is paying that one deductible. But it doesn't matter where the loss occurs, the height of the loss, the deductible is applied to each loss. And it is exhausted if your damages are greater than your policy limits and there's not a deductible.
Thank you. The third question, in the normal case, does the insured send all cost estimates for cleanup and reno to the adjuster for consideration, or does the adjuster make an independent assessment based on his review? Is there any way to bypass the adjuster and go to FEMA directly if the adjuster is not responsive?
If the adjuster is not responsive and this is a colonial claims file, I want you to email dbranham@colonialclaims.com or call our office at 727-738-1366, and we'll make sure you get a response. Now, the adjuster is going to write his estimate off the covered area of damages, and most of these documentation, like I think you're talking about here, are going to be in some non-covered areas, and that has nothing to do with the policy. I can't give you advice on where to go with any thing that isn't covered.
Okay.
All right,
Contractor
let me add a
estimates.
little bit to that, guys. Can I add a little bit?
Sure.
So we have an estimating software, Xactimate. The adjuster is going to go out there and write an estimate based on the damages. If we receive a contractor's estimate or any mitigation vendors that's out there giving us any estimates, we're going to work together. However, we're going to write our own estimate based on FEMA's requirements. We're not going to just grab somebody's inflated estimate and just copy it and cut the check and go home. We'll review it, we'll compare it, we'll address it in the sense of, you know, we're apples and apples on this item is not covered, that's why it's not on my estimate. Or this third item, you know, it costs $8 a square foot to do this and you're asking for $24 a square foot to do it. We're going to have a difference, and then there's some kind of a negotiation there to have a fair price for the estimate.
Very good. The next question, contractor estimates for repairs vary widely. The adjuster estimate of payment seems to take much longer than the time we have to choose a contractor and decide what to spend for repairs. Is there a rule of thumb to predict the estimated payment from flood insurance? How is the owner expected to guess the insurance payment so we know how much is available for repairs?
Miguel, you want that one?
Yeah, I'll take it. To know the actual cost of the repairs, we won't know that until the estimate's written on the software. That could be a challenge timing wise with a big storm like this, which I think is probably where the question is coming from. But the best way to know is when the estimate's done is the most accurate way to know. Our adjusters have a lot of experience and could verbalize some guidance of you know, how more or less what the damages are or what we're seeing. And like Doug mentioned, part of our process is to go item by item and explain what's going to be on the estimate.
Howard, we use a database, and most people are using the same database now. And this database was created by contractors in the local areas. So as you move around the country, the price of sheetrock can vary from each area of the country. Southwest Florida, there in your Naples area, it's going to be one of the higher areas, and that database is changing daily. We will use it, but the database is not a stone tablet. If you are reasonable and prudent and your costs are a little higher than the database and their verifiable costs, we will change our estimate at that point in time for a higher amount.
Very good. Thank you. Do you have any information regarding which, if any, condo buildings in Park Shore are pre-firm? I believe the oldest buildings are at the south end, like Horizon House, Surf's Edge, and Gulfside. Anyone want to field that?
Yeah, we touched on it a little bit at the beginning when I went through some of those slides on pre-firm. I mean, generally the date is going to be attached to the December 31st, 1974 on or before that date is generally going to be when the pre-firm is going to be categorized. However, since the unincorporated Collier County pre-firm date is later, I know there was some point in time where there was some level of annexing in the city of Naples that took unincorporated Collier County area along Gulf Shore Boulevard. So some of those buildings that might have been after that date would effectively have the pre-firm date from Collier County that might be eligible under that standpoint. So those are the dates that are used, but it's effectively those buildings 1974 prior, December 31st, 74, the ones that are categorized as pre-firm.
Very good. How do we tell which private carrier is handling our policy for FEMA?
It's on the declaration page for your flood insurance. It's pretty front and center. It'll say it on there. There'll be a logo, et cetera. Just ask your agent, but you should have access to that information. It's pretty clear.
We had to throw you a softball there,
Yeah.
Is FEMA 50%? I think there's a typo here. I think they're talking about the 50% rule. The requirements, including appraisal by a private company and elevation studies, are required before a contractor can get a permit.
That's up to the local building authorities to issue permits to build. And it's also up to the local authorities to determine if their 50% rule has been exceeded. Neither FEMA nor the carriers nor the adjusters have the ability to determine if something has been substantially damaged. Only your local authorities can make that substantial damage call, and it all revolves around them and what they determine.
Are areas that are above ground but not living areas covered? Above grade garages, lobby, laundry areas, building is pre-firm 1964 build.
Yes.
Electrical coverage. Can you talk more about what is covered? Only outlets or the wiring brought to it? Is there an exhaustive list somewhere of what precisely is covered? We received our preliminary estimate from the adjuster, and it seems some items aren't covered. Seasonal owner wasn't able to be on site.
Miguel, correct me if I missed this, but I think all electrical is covered. Wiring runs, the electric panels, everything. The only thing that might be restricted in coverage is a finished light in a restricted area with the post-firm elevated special flood hazard zone. Other than that, all electrical is.
Okay, I'll add a little to that. That's correct. Directly physically damaged by the floodwaters. So that electrical component had to be physically touched by the floodwaters for coverage to trigger on that item.
Just as a point of clarification, question for Miguel and Doug both. So if we're dealing with the area below the elevated floor post-firm building and the elevator has been compromised, how much of the elevator electrical is covered apart from the cab? Is it the cab electrical covered if that's been compromised?
I'm sorry, there was a pop-up on my screen and I missed part of your question, but I think in the elevator, you're going to have all the electrical is going to be covered, period.
Okay.
Except those finished outlets or finished lights on the exterior of the house, or in a basement, the finished light fixture itself, but the electrical that runs to it, the outlets, the plug-ins, everything's going to be covered in electrical. Even electrical will be covered for non-covered items. A generator sitting outside the building is excluded, but the electrical that powers it in those special restricted areas, the electrical there is covered, even though it's for a non-covered item.
Great. Thank you, Doug.
Is there max coverage for damaged appliances?
The value and the amount of the damage to it. There's no limit of what you can pay for a stove, refrigerator, freezer, etc.
Explain coverage of condo electrical wiring inside conduit under the cement slab that was filled with salt water.
I don't think that that's covered. Miguel, you can comment.
No, I agree.
We cover at ground level and above, nothing underground is covered.
The next question, when does Doug do the scoping with unit owners? Our condo adjuster refused to meet with unit owners. No scoping was done with individuals. Should they have met with us, and what is our recourse now?
I would find out who the adjuster is, and I would go to the firm they work for and say, hey, your guy hasn't scoped my unit, and gosh, we're 2.5 months in. I can't imagine that anyone's loss hasn't been inspected and scoped, regardless of who the carrier or who the adjusting firm is.
Just make a quick note. My experience in walking with adjusters, some of which are part of Doug's team, is that they've been very agreeable to meeting and walking with certain board members or unit owners that are interested in the process. I have not had a situation where nobody's been open to doing that. So I would echo Doug's sentiment that they need to follow up with whatever firm that adjuster's connected to and find out what's going on there, because that's unusual.
The next question is scope of loss a requirement duty of the adjuster? Our adjuster did not give us this. He refused to go into areas that still were not cleaned.
The adjuster has to give the insured their scope of damages, or the insured doesn't know what they're being paid for. And the adjuster should inspect everything. There are instances where it's unsafe for an adjuster to enter a building or a premises for whatever reason. It may be water still in it. The building could be potentially collapsing. But if there's no burdens to scoping a loss, every room should be looked at and photographed, and the damages written and extended in that room, and all those worksheets given to the carrier, the insured, and they ultimately go to FEMA.
Next question, can you explain RCV versus ACV one more time?
RCV is replacement cost value. ACV is actual cash value. So we're writing our estimates and replacement cost value for all losses. Some losses, like a commercial loss on a commercial building, they are ACV only, so you apply depreciation to them. On contents, all contents are actual cash value, so you apply depreciation to them. Depreciation is determined by the obsolescence, the functioning value, the age consideration, the wear and tear on the item. So those items, you've got replacement costs less depreciation is actual cash value.
What is the expected time frame for claim payments to the named insured?
Howard, those vary by instances of how big of an occurrence it is. Normally, the insured has only 60 days to file their proof of loss in. As soon as this storm was hit, everyone involved in it knows we're not going to get this done in 60 days. FEMA waived signing a proof of loss in this storm. So you have up to 1 year to file your proof in. There's been many insureds who have been paid. We have extended out probably $100 million in advances from Colonial and our carriers in this storm already. Everyone's not going to be paid by tomorrow, unfortunately. And no one wants these lawsuits to close sooner than the insureds, sooner than Joe, sooner than Miguel and I want them closed, because the people need help. They need their money, and we need to be able to move on so we can help other people in similar situations going forward. Everyone is working for a closure. It just does not happen immediately in most cases.
Right. So let me add a little bit to that. Just to give you some perspective from the industry, for Ian, the NFIP program received 46,000 claims. That's all across the board, all carriers. The industry is about 34-35% closed right now. So there's still a good 65% of insurers who haven't been paid. This is program wide. There's some carriers are ahead of that, like we are. Other carriers are below that, but across the entire industry, 46,000 and mid-30% have been finalized already.
Very good. The next question is for Doug. How do you determine which cleanup costs are covered in the RCBAP? For example, isn't picking up and hauling away broken doors and windows part of cleanup, even if replacement of those doors and windows aren't covered?
The only thing that we can pay for is for covered items. But doors and windows are usually covered. The door to the condo that you go into to walk into the lobby for your elevator may not be covered, but those are minimal costs. But for the tear out of covered items, everything is covered to haul that debris away.
So sounds like if it's not a covered item, then the cleanup is not covered. Is that?
If it's not covered, not only is the cleanup not covered, but the debris removal is not either.
I think a good example of that is the area below the first elevated floor in the post-firm buildings, where you have that situation where the common doors are blown out, or doors to garages, et cetera. Those items are not going to be covered items. So therefore, in that case, cleanup of those items won't be provided as well.
So it's very traditional for us. Yeah, 1 second. It's very traditional for us to have like a dumpster allowance in our estimate. So that dumpster will be outside the property, it gets filled as they're taking debris away, and then gets hauled away to the dumps. So that cost is usually in the estimate.
Very good. Next item, please discuss cleanup in more detail. 3-story units, lower levels filled with water and muck. Mold was a huge concern. We hired a remediation cleanup company Saturday after the Wednesday storm. Adjuster says this cleanup effort is not covered. Adjuster says we should not have started until power was restored, which was not for weeks. Our upper 2 levels would have been growing fields of mold. Her position makes no sense. Please discuss. We are obviously trying to avoid further flood damage.
The problem we get into with remediation is that the policy says that if you receive mold and mildew damage and you cannot correct it or stop it, that's a direct damages from flood, and we'll pay for it. Now, the directions from FEMA also tell us that we do not try to dry out an area unless the wet damaged items have been removed. So I don't know all the circumstances in this inquiry, but the proper way is, if you're going to hire a service, make sure that you are agreed in scope and what they're going to do. Don't give anyone a signed blank work order that just says, hey, I'm going to take care of your remediation and tear out your damages for a an unknown X. I would have the wet items removed, and I understand their problem, and it's an issue that it's kind of gray. I don't like it ourselves, but we can't pay for temporary generators for dry out and mitigation. It's just take out the materials, try to dry it out. But I'd like for Miguel to comment on this as well.
Miguel?
So with the NFIP program, there's a bulletin published by FEMA. You guys could Google it. Like I said earlier, it's all public. I will provide the bulletin to you guys if you want. It's W130258. It's like a 12, 14, 20 page document. I forgot how many numbers. That has a lot of, or all, it's pretty much the guide of how to evaluate mitigation, what the program allows. That's a real good tool to see what's covered or allowed with the program. Mitigation is a touchy subject, like Doug said. A lot of improper billing, a lot of inflation, and then it's too late because the job's already done, and we're stuck, or we're provided an estimate that with items that we can't take care of because it was inflated or improperly billed or just inflated is the big one. Doug mentioned this, the policy is going to pay to repair or replace. So that drywall is wet, for example, which is one of the most popular things in these floods, right? Wet drywall. So these mitigation vendors have the experience, tools, and ability to determine if that drywall could be saved or not. So, it reached certain amount of moisture, it could be dried, and they go with the dry process. Or it's beyond repair, and it's just going to be torn out day one. A good indicator for a homeowner, grab your finger and poke the drywall. If your finger goes right through the drywall, it's beyond repair, right? So they can't dry it for like a whole week and then say, oh, they didn't dry it, let's replace it. The policy is going to pay for either or replace or repair, not both.
The next question is, does being pre-firm matter for actual cash value or replacement cost?
No.
I like these simple questions and answers. If you provided documentation of new cabinets that had been installed 2 days prior to Ian, total cost was $55,000, and the loss estimate says they will pay $18,000, what is your recourse?
Well, the first thing I'd want to know is, okay, you've established the value with what you paid for them 2 days prior to the incident, but let's establish the damages. Now, if the damages are there, that they're a total loss, I would say that you were owed $55,000. If the damages are, these are not a total loss and can be repaired, and the repair is for $18,000, that's what you'll get. What's happening here is the adjuster, if they're considering them a total loss, are using a database, and the database pricing is X, and that's where they're coming up with the $18,000. But if these are a total loss, show the adjuster what you paid for them, and I'm sure that the pricing on your cabinets will be changed.
So kitchens, there's a couple things with kitchens. A lot of folks suffered damages to just the lower cabinets. So direct physical damage from the flood that actually the flood waters actually touch only the lower cabinets. So for example, lower cabinets are like 3.5 feet tall. There's 2 feet of water. The damages to the lower cabinets, the policy is not going to pay to replace the uppers and lowers. Like a granite countertop that wasn't physically damaged by the flood, the policy is not going to pay to replace it, but it will pay to remove and reinstall it. If during that remove and reinstall process, they're not careful and they cause damage to it. So it wasn't damaged by the storm, but now it's damaged by the person who is trying to replace it or remove it. That's a whole different situation there that is looked at case by case. a pantry that goes from the floor, like a big pantry door that goes from like the floor to the roof. That probably will be replaced completely because the lower part of it was damaged, but upper and lower cabinets, only the lowers were damaged. The uppers will not be included. And
Thanks
that's
for,
always a big dispute. That's always a big dispute in the kitchen.
thanks for helping me out on that, Miguel. And we want to remind you that the policy doesn't cover for matching. So that's the reason the lowers are covered and the uppers are covered also, they're just not damaged. So we're going to only replace the damaged items.
What is the rate or percent of depreciation applied?
It's an individual basis on every item. If you are looking at an adjuster's worksheet and they're sitting there depreciating everything 10%, 20%, 15%, you've got a poor worksheet. The adjuster needs to depreciate each item on an individual basis.
When the condo association is the policyholder, do they have to file any dispute, et cetera, or can individual owners act on their own?
We're insuring the association. We're not insuring the unit owners. So it would be the condo association would have to file for an appeal.
Can we talk about cleanup of sand? Feet of sand all over property. Clearance has cost a small fortune. How to distinguish cleanup of sand in the building, in the carports versus around the property?
Outside the premises of the perimeter walls, there's no removal of sand or other debris. Inside the perimeter, we will remove the cost of sand at a reasonable and prudent price.
Could you elaborate a little bit more on pre-firm coverage versus post-firm?
The pre-firm buildings were built before the flood policy was even put into law in some instances. So they were grandfathered in on coverage, and your entire building is covered. In these post-firm elevated buildings, they are elevated by stem walls, by pilings, by concrete piers, by various different things. And your coverage is from the lowest elevated floor up. And if you have a home and the house is elevated 2 feet off the ground, there's an airspace under it, and you step down into the garage and you're in one of these post-firm elevated special flood hazard zones, your coverage in the garage doesn't begin until an imaginary line from your lowest floor across that garage. Anything hanging on the wall as a contents item would be covered. If you have a lawnmower or a freezer, a lawnmower or some other item like that sitting in the floor of the garage, it's below that lowest, that imaginary line. It would be excluded in these post-firm elevated buildings, while all of that would be covered in the pre-firm.
Thank you. Our next question. Can individual unit owners use the loss assessment benefit portion of their policy to cover a portion of any flood loss assessment from the building?
Generally, no, because you have to have an underlying coverage of what's being assessed for. So if your HO6 policy clearly doesn't contain flood coverage and the assessment is purely related to costs under deductible or under whatever's not covered by flood, then your carrier may pick up on that pretty quickly and deny the claim. Now, some instances, if you broadly word how that loss assessment or that special assessment is going to be created and it's sent to insurance companies, and again, you can't be fraudulent here. We're not trying to make any sort of a material misrepresentation to insurance companies, but if it's worded insofar as these are damages below related to Hurricane Ian, they submit those to their individual HO6 carriers, there might be some that get approved. It's something that you just have to expect as a unit owner to have additional information asked by the companies, specifically, what is this special assessment for? What specifically are they assessing you for? And if it comes back that you have to provide additional information and it shows that it's mostly related to cleanup outside the building envelope from the flood, pool reconstruction, pavers, or whatever, things that were not covered, they're going to most likely not apply, coverage for that instance. That's just how loss assessment works. Now, if it's related to, wind damage and you have wind on your HO6, you're going to have coverage for that. So also consult with your attorneys on the creation of that letter as well, and get some counsel on that front, because the number of attorneys I've talked to have all kind of said it in the same vein, that it should be generally written, but you want to be careful to make sure to not be misleading as well.
Next question, thank you, Joe, was what about non-dwelling buildings like the clubhouse that was flooded?
They should have their own policy.
How do we tell if we are with Colonial?
The adjuster has to identify himself to you when you go out on a loss, whether it's our adjuster or someone else's. They should have identified themselves, given you something in writing with their name, phone number, email address on it.
Yeah, every adjuster I've dealt with that works for Doug usually has a card. And when we start corresponding, when I've been looped into correspondence, usually to the manager or whomever has been involved, it's pretty clear on their email that they're with Colonial. So it's not something that's been out of sight.
I could add a little bit to that, guys. So when the claim is reported to the carrier, I'll speak for myself, but hopefully everybody's doing this. You should receive an acknowledgement letter, like a welcome letter that we received your claim, who the inside examiner is, and who the field adjuster or who the IA company assigned to the claim. That's one way. Another way, when the examiner from the carrier calls you, they'll provide that information as well. You might get a call. Your next call from the field adjuster could be from the field adjuster himself, or from like their dispatch in-house, who's creating their schedule and doing those introductions. I'll speak for myself. We have some technology too. I don't know if you guys ever or recently had somebody come out to your home with technology, either somebody to repair your refrigerator, or AT&T or Comcast are coming to fix your internet. And there's on your app, like on your Comcast app, you get a picture of your technician and their name and their location. So we have that technology as well. I'm speaking for us, for Assurant. We have that technology where you get the link with the adjuster's picture, his bio, his contact info, and similar to like Amazon, your adjuster's 2 inspections away, and you could upload. Pretty cool. It's a nice portal where you could communicate through there, upload information through there, see their face, their bio, their picture. Pretty cool portal, but not too many people have that technology out there. I know we do. Excellent.
We've got a handful of questions that are continuing to come in, so we'll try to get through all these if possible. Is temporary power covered if you were unable to get electrical access for 2 months?
No.
On pre-firm insurance, our party rooms were destroyed. The adjuster says wall cabinets are not covered, but how do you match? I'm not sure I understand that question. Air handlers inside are not covered, but you can't match old air handlers to the new condenser. What do you do?
On the policy, the policies for direct damage from flood, the upper cabinets aren't damaged. We're only going to pay the lower, as Miguel said earlier. On the air handlers inside, many people say those won't match up to the new units. I believe that most of that is just copper tubing and rubber hoses. I think that you can get the air handler to match, but the rule is that if that air handler inside the house isn't damaged and the HVAC unit outside is, we're only paying you for the direct damage on the exterior.
Okay.
Well, when I say we, I'm talking about the federal law that we have to amend to. The federal law says you're not paid for it, not the adjuster, not the carrier, not anyone else.
Do built-in cabinets count as fixtures of the building or as contents?
Building.
If you receive a check and your association sells the property, do you have to pay the money back?
We can't answer that for you.
No. No, they suffered a loss and that damage is there. And there was a policy at the time of the loss, we owe it, we have to pay it.
The next party writes, focus of presentation has been post-firm. Can you provide a short comparison for pre-firm regarding what is covered inside a condo unit on the association policy?
If you look back, and I don't care if Joe emails that one policy sheet showing exclusions. The exclusions that were in those red line boxes, they're the only difference between pre-firm basements and post-firm buildings are those 17 items. Otherwise, all the items in all the policies are identical.
It seems pretty cut and dry what is covered under the RCBAP. Our condo association has not started the unit repair process or paid unit owners. They are telling us it is very complicated, difficult to determine what is covered, but doesn't RCBAP spell it out?
The RCBAP worksheet will list what we're paying for in the exterior utilities, being whether it's elevator, HVAC systems, electrical systems, and it will list what's been paid for in a lobby or a common area, and it will list individually what's been paid for every unit. So it shouldn't be too complicated that you don't see what your allowance is for and what the common elements are for.
One particular association received a $100,000 advance payment, saying they can't distribute because they're waiting for a report from FEMA directing them on how to distribute. How long can the association hold monies from unit owners? Is it common for FEMA to send advance monies without direction?
FEMA is not going to tell anybody how to pass that money out. That's up to the association. It's their money.
So we're mandated and encouraged to offer advance payments once we get on site for the initial inspection. That advance payment, it's individual case by case scenario. Those decisions are determined based on the coverages, the damages, conversations with the insured, like, hey, I'm fine, I'm doing the repairs myself, or I have money, no thanks, or I don't have money and there's mitigation and going on and I need money. So that advance is provided early on the process. It's not free money. It's not a different line of coverage. It's an advance payment that is deducted from the settlement at the end. The insurance company does not get involved with the repairs. Who the homeowner or the association gets involved with contractors or whoever. Once we pay the claim, it's up to the prospective parties, the homeowners or whoever's in charge to deal with that, to get the contractor, pay them and manage all that.
Does flood insurance cover the heater boiler to residential units that is on the roof of the condo building?
When water got up that far, we'll have a whole different conversation.
Yeah, that's good. That's going to be an expensive claim, but yes, it's covered.
Can you repeat the contact information regarding FEMA mitigation?
It's a bulletin. You could Google this FEMA bulletin, W like whiskey, 13025 A like alpha. Put that in a Google search, it'll come right up. You can print it.
We have two more questions and we'll wrap it up. Is displacement costs covered for primary residences by FEMA or by someone's private insurance if they don't have flood insurance? The units cannot be lived in because there is no power.
displacement is not covered. There's no additional living expense. And as far as private insurance carriers, they all have different circumstances and policy terms and conditions.
Our last question is from Miguel. Electrical damage, wiring was wrapped in paper, water seeped up. Everything had to be taken out per electrician's warranty, just remodeled. All new electrical behind drywall was completed in September.
Yeah, it was directly physically damaged. It'll be on the estimate.
I believe that wraps up our Q&A. Cindy, did you have an announcement you wanted to make before closing?
Thank you, Howard. Just to let everyone know, I think there might be just one or two more questions, but we'll make sure that you've got the contact information for our speakers today. The PowerPoint presentation that the speakers utilized today will be posted on our website. If you go to gsacnaples.org/news, I'll add the PowerPoint immediately to that news item that's promoting today's event. But it will take us a few days to process the video and get that out. If you are not registered to receive our emails, I will be downloading the list of attendees and adding you to our newsletter list for distribution. So you will get a copy of today's presentation and you can share that with your board of directors, legal consultants, etc. So you will have access to everything we have. But I think everyone here, we just want to say thank you so much for your patience, your attendance, your thoughtful questions, and most of all to the presenters. Thank you for such amazing advice today.
It was my pleasure.
Thank you guys very much.
Thank you.
Many
Thank
thanks.
you, everyone.
Thank you.